Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 264 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in our long-term financial journeys. Today, we are going to talk about some scary financial statistics, some statistics that I think you need to be aware of. Because if you are not aware of some of these things that I'm going to talk about today, maybe you never will have the motivation to change your financial life. Maybe you will never have a reason to do something different. But I think when we are faced with things that are actually scary, when we're faced with things that make us examine our own lives and better understand where we are in our own lives and our own financial lives, then we can begin to make changes. So I want to make you aware of some of these statistics that are about a broader set of the population, but you may be able to apply to your own life. So stick around for all of that and more commentary from me in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, building financial goals for you and your family, and then helping you to meet those goals, helping you to attain those goals over the long term, and then pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now look, the point of this show, the point of everything that I do on Money's No Object is to motivate you to act financially, to make you more aware of things that are going on financially in real time and the news that's going on around our finances, and also to teach you new things and new nuances to personal finance that you may not otherwise have come across. And today is really going to be all about the motivation. Okay, I really want to motivate you guys to do better. I want to motivate you guys to get started, to get on the right foot financially if you haven't done so already. And I know it's hard. And I know you may have tried before, and I know it's something that, everybody has tried to get their financial life in order. It's just like everybody trying to start a diet, right? You start a diet and you think everything's going to go good. And, 2 or 3 weeks later, you find yourself sitting on the couch eating chips, not working out, not doing the things that you said you were going to do. Okay, and the same thing goes for people's finances. They, may go 1 month where they'll budget and they may begin to make some minor changes in their financial life, but then they just don't hold on to them because life happens and things happen that change their specific situation. And so they end up in a place where they're not doing the right things financially any longer. But we have to understand that there is a price to pay. There's a price to pay for not doing the right things financially. And so I want you to understand some of the scarier parts of personal finance, some of the scarier statistics that are real, that are tangible, that are actually occurring before our eyes right now, okay? And I want you to understand them better, because if you understand some of these facts, some of these statistics, and you hear them, hopefully it motivates you to act. Hopefully it motivates you to do something better in your financial life. So let us jump right into 8 scary statistics and how to avoid becoming one. So 8 scary statistics about your personal finances and how to avoid becoming a statistic in one of these areas, okay? So the first fact is that 2/3 of Americans would struggle to scrounge up $1,000 in an emergency. Okay, so $1,000 seems like a lot of money, and it is a lot of money. $1,000 is no slouch, right? If something costs $1,000, we think twice. Now I say that other than our beautiful iPhones that cost $1,200, $1,500, $1,700, and we put on payment plans. Okay, so we don't think so much about that. But if you had to pay in cash up front for something that costs $1,000, that's steep, right? It's steep to pay $1,000 for anything. Okay, and 2/3 of Americans would struggle to scrounge up $1,000 if they absolutely had to. Right? If there was no other choice but to come up with $1,000 or something bad was going to happen, something bad would just have to happen to these individuals. Okay. And that's frustrating. That's unfortunate. Okay. Because a lot of the bigger things that can occur emergency wise and just life happening, right? Things that occur in life can cost more than $1,000. Okay, if let's just say you have liability insurance on your vehicle, meaning that if you were to hit somebody else, then your insurance covers the fix on their vehicle, but you have to come up with the money on your own, right? That can easily come up to $1,000 bill. Think about if your transmission falls out of your car. I know these are a lot of auto examples I'm giving here, but that can be very expensive. Think about if your transmission stops working, then that's easily going to be $1,000 bill. Think about if you have an emergency room visit. It can be $1,000 bill, okay? So you have to understand that these types of things happen in our life. And so that's why when I am teaching you guys personal finance, I'm teaching you how to get your financial life in order. One of the first things I tell you to do is to set aside some money in an emergency fund. And I tell you to set aside a month's worth of expenses before we even get into any of the other bigger things in your financial action plan. I tell you to budget uniquely every month. And then in the second part of the financial action plan, I tell you to set aside 1 month's worth of expenses. And for just about any individual or just about any household, right, there's no way that you have less than $1,000 in monthly expenses. So you should be able to put $1,000 aside. And if you put $1,000 aside, just $1,000, right, that just gives you a buffer. Okay, and then more than $1,000 is obviously going to give you more and more of a buffer between you and life. Because how are you going to make financial progress if you keep getting set back by the fact that life is occurring around you and you can't come up with the amount of money to pay for life happening? Okay, so that's why I tell you guys to pick up an emergency fund, to build up an emergency fund, at least a small one to start out, and then build it up later on once you're out of debt. Okay, so that is the first fact. 2/3 of Americans would struggle to scrounge up $1,000 in an emergency. Second fact, second scary financial statistic. Only 24% of millennials demonstrate basic financial literacy, according to a study from the National Endowment for Financial Education. This statistic is even more worrying, considering that 69% of the millennials surveyed rated their financial knowledge highly, according to the study done in partnership with the Global Financial Literacy Excellence Center at GWU. Okay, learn to recognize and learn from your money mistakes. Okay, and that's what millennials need to do. They need to learn from their money mistakes. A lot of millennials are making money mistakes, but then never learning from them, never moving forward in becoming more financially literate. They just wallow in the things that they've done wrong. Okay, either they are blaming other individuals for things that they've done wrong, or they just don't know how to get out, and they're just staying in that place because sometimes the thing that we know is more comfortable than the good thing that we don't know. Okay, and so a lot of individuals that are in their 20s, 30s, 40s, they are not very financially literate for a couple of reasons. One, it's not being taught to them, but two, they are constantly getting set back financially to the point where they don't want to talk about their finances. They don't want to learn more about their finances. They'd rather just wallow in the place that they're at than learn anything new. But this is scary that only 24% of millennials demonstrate basic financial literacy, because we all need to be financially literate in a basic manner. We all need to know some basic things about our finances. And if we don't have some basic knowledge, then how are we ever going to get ahead? How are we ever going to build wealth? How are we ever going to get out of the bondage of debt? The answer is you're not. Okay. And to be honest, the banks don't want you to be extremely financially literate, because if you were, then you wouldn't be taking out loans from them. And schools don't want you to be extremely financially literate, because if you were, then you wouldn't be going to the expensive ones, and you would be able to keep college at a lower cost because you wouldn't be taking out student loans. Okay, so all these things end up compounding into the fact that we are just not very good financially as millennials, and it's something that we need to do better at. And that's why I'm here every day trying to teach you guys some basic financial literacy skills. And then I up the ante a little bit from time to time and try to teach you some things that are a little more advanced to help you along in your financial life. Okay, so that is the second statistic. Only 24% of millennials demonstrate basic financial literacy. The third statistic, among adults who have combined finances in current or previous relationships, 2 out of 5 fess up to committing financial infidelity. So we talked recently about being married and your finances, or being a couple and your finances, right? And we know that couples aren't doing well when it comes to their finances, and they aren't doing well when it comes to combining their finances and being able to work together financially. We know this, okay? All the statistics point to that being the case. But what we also know is we know that financial infidelity can be a huge part of your finances not working with another individual. Okay, if you are doing things with your money that your spouse doesn't know about and you have combined finances, then things are likely going to end badly. Things are likely going to end in a way that you do not want them to end, because when you're working together, you need to be communicating. You need to be telling one another what you're doing, why you're doing it, and working together with a plan that is shared, and not doing anything over on the side that you think, oh, this is just going to be, my little secret, my little thing, right? In the same way as a romantic affair, a financial affair can put you in dire straits when it comes to your relationship. So obviously this is something that we need to turn around. We need to stop being so secretive with our spouses. We need to work together with our spouses. We need to do things to become more communicative and to be better in sync with one another, and then not be committing financial infidelity on one another, and obviously not sexual infidelity on one another. Okay, so 2 out of 5 adults who have combined their finances, they fess up to committing financial infidelity, right? This is just, one, it's appalling, but 2, it shows how little we trust one another. It shows how little we are prepared to share our financial lives with someone else. Okay, and you have to know that if you go into a marriage, that you are sharing your financial life with someone else. And it's a very, very big responsibility, but it's something that if you're going to take it on, if you are going to get married, then you need to be prepared to share your financial life in every single piece, and not have a credit card over here that you're running up a balance on, or that you have debt on and you're just making payments to try to stay afloat, or some other debt that you may have, or I have this credit card that I spend on XYZ, and so-and-so doesn't know about it, or I set aside money and my spouse doesn't know. All those things are negative and should not be occurring in your financial life. Then the fourth statistic, okay, the fourth scary statistic when it comes to your personal finances, or our personal finances, is that about 77 million Americans, or 35% of adults with a credit file, have debt in collections reported in their credit files. Even scarier, these borrowers owed an average of $5,178, the report finds. Not paying your bills on time is a double whammy. It costs you in the interest and fees and dings your credit score, making consumer debt more expensive for you in the future. Okay? So what's this tell us? Well, one, being out of debt leaves you in a position where you don't have debt that goes into collections, right? If you don't have debt, then how do you have debt that goes into collections? You don't. Okay, so that's one of the reasons why I tell you all to be out of debt, to pay your debt off, okay, to be debt free. Because when you are debt free, then you don't have to deal with the interest and fees associated with debts that you cannot pay. And then not only that, what this tells me about us as a society is that we are so hungry to buy things that we can't afford in cash, then we are willing to take out debt that we can't repay, or at some point we can't repay, right? And take out that debt anyway just to have the thing that we wanted, right? We're all about the wants. We're all about the right now. We are not about the long term. And this is scary. It is scary that we do not have more of a long-term view on life, and we don't have more of a long-term view of our finances. We are very today. We are very right now. And that is problematic. And it's going to continue to be problematic because the more debt that individuals take out and the more debt that's going to go into collections, right? This is going to make our economy weaker and weaker. This is going to make us financially weaker and weaker. We're going to have lower credit scores. We're going to have less money because we're taking out debt constantly, right? We're going to have no money in savings because it's all going towards our debt payments, and we can't make those debt payments anyway, right? So this is scary. It's scary to know how many people are actually in collections or have been in collections in the past. And I don't want you guys to be there. That's another reason why I'm telling you guys not to take out debt and not to be somebody who just racks up debt on things that they like or things that they want, because ultimately, if you go into collections, it can be so costly for you and your family. It can mess up your credit for a long time, and that's not what I want for you guys. I want you guys to live healthy financial lives. I want you to stay out of debt. I want you to pay for things in cash. I want you to be able to afford things. Isn't that a novel idea? Okay. But this is very, very scary that so many people, 77 million Americans, there's only 330 million of us, and 77 million have had debt and collections reported in their credit files. Okay. Then the fifth statistic is that just 46% of Americans have a rainy day fund. So this all kind of goes back to our talk about, setting aside money, having $1,000 to spend on something, right? Having a rainy day fund is just extremely, extremely important. Okay. I said 1 month of expenses is how I tell you guys to get started in the financial action plan, but it's not all I tell you to do. I tell you to start with that, but then after you are out of consumer debt, then I tell you to build up 4 to 6 months worth of household expenses in order to put that into your emergency fund, into your rainy day fund. Now, this says that 46% of Americans have a rainy day fund. So less than half even have a rainy day fund. But this doesn't specify how much each rainy day fund is actually worth. Okay, how much is actually in each one of those accounts. My guess is not that much, right? A rainy day fund for somebody, they may think, $100, couple $100, whatever. I'm just telling you that's not enough. I talked to you earlier about how emergencies can be costly. They can be big. Okay. And those types of emergencies that I talked about earlier are just the tip of the iceberg. There can be much more costly emergencies that will require you to pull more money from your rainy day fund. Just think about if you lose a job. Think about if you lost a job during coronavirus and you have an emergency fund. You have a rainy day fund that you can pull from, that you can live off of, that you actually have that money. Why would we need money from the government if we had emergency funds, if we had rainy day funds setting aside? Okay, having these types of things can make us much more reliant on our own financial position and not on the government to bail us out or some other entity or person to help us out. Okay, so you need to have a rainy day fund. You need to have money set aside in savings, and it needs to be enough to deal with some of life's biggest speed bumps. Okay, so have a rainy day fund. Build one up that is of substantial size. Don't just have one. Right? Obviously, we don't want emergencies to occur. We don't want rainy days to happen. But trust me, it's going to rain. So just be prepared for that to occur. Next fact. The number of consumers age 60 and older with student loan debt has quadrupled over the last decade. Quadrupled. 60 and older student loan debt. That's sad. Okay? That surpasses scary. That's sad. It's sad that people age 60 and older have student loan debt in the first place. But for the number of individuals that do to have quadrupled over the last decade is sad. It's extremely scary. Don't get me wrong. That is a scary, scary statistic because for that many individuals to owe student loan debt, that means we are in a broken educational system. And we are in a broken system when it comes to paying for college. And the student loan program is 100% broken. This is outrageous. It's crazy that this many people are in student loan debt, and people of this age group are in student loan debt. Okay, this is why student loans have to be avoided. Right? I know you feel like this is the only way you can go to school. It's not. It may be the only way that you can go to the school that you want to in the timeline that you want to go there. Right? But remember that our financial life cannot be all about our wants, right? And it cannot be all about some keeping up with the Jones timeline. Okay, you need to do the right thing for you financially. You need to do the right thing for you over the long term. And trust me, the money that you're spending on a school that is too costly and the money that you're taking loans out to pay for this very, very costly school is not going to be worth it in the ROI that you get on going to this school. Okay, ultimately, if you go to community college, good for you. Okay, if you go to a cost-effective school and you pay for it yourself, good for you. That's what you should be doing. That's what we should all be doing. There should be no federal student loan program. Okay, not only should there be no federal student loan program, there should be no student loans for people who are 60 and over. I'm not saying that they shouldn't have the loans because, yes, they did take them out. But I'm saying this shouldn't be an issue. This shouldn't be something that we have to deal with because we need to make better decisions. Okay, we need to make better decisions. I know society is pushing you towards student loans. I know it's something that you feel like is just a fact of life, but it does not have to be. And you can watch some of my other episodes about student loans and see how I feel so strongly about this particular topic and how it is possible to pay for school not using student loans. Then the seventh financial statistic that I have for you guys is that nearly 1/3 of Americans pay the minimum due on their credit card each month. The minimum. Now, if I haven't explained this about credit cards before, this is how credit cards work. Okay, credit cards, you take out some line of credit, basically, right? Where you have some credit balance that you can spend up to. But if every single month you don't pay that off, right, then you are going to sustain a balance and you are going to accrue interest, and then you're going to owe some minimum payment. Now, this minimum payment is not going to get you to pay off the amount that you have in credit card debt, okay? Nor, if you continued making this minimum payment, would you be paying this debt off in a timely manner, okay? What this minimum payment is it's just some amount that the credit card company has chosen that they want from you on a minimum basis, okay? But if you ran up, let's say you ran up all the way to your balance on a credit card, which I don't suggest, but let's say you did this. Okay, you ran up all the way to your balance and you just made the minimum payments. Well, guess what? Your credit card balance is going to continue going up and up and up over time, very, very, very likely. Okay, and that's not what we want. We want individuals to be decreasing their credit card balances all the way down to zero at the end of every single month. We don't want you to ever accrue interest. Credit cards are super, super dangerous if you allow them to be. Okay, if you feel like those balances are just money that you have to spend, you are going to be in trouble when those bills keep racking up and you keep having to pay interest on your credit cards. Never, 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 never pay interest on your credit cards. Okay, the average household with credit card debt pays a total of $1,292 in credit card interest per year. What? This is an outrageous amount of money to be spending on interest on credit cards, meaning you went out and bought stuff that you couldn't afford, and now you're struggling to pay it off, and you're having to pay interest on the stuff that you went out and bought. This is a crazy idea. $1,292 a month. So let's say $100 a month. Think about if you could invest another $100 a month. Investing another $100 a month could really help you to get to where you wanted to get in your financial life. But instead, you're throwing it away in interest to your credit cards. Get out of credit card debt. And if you have a problem with buying things with your credit card and just running up your balances all the time, then get rid of your credit cards. Okay. Otherwise, if you can pay them off every single month, I'm fine with that. But they are more dangerous than they are beneficial over the long term. Okay. So if you have to get rid of them, by all means, get rid of them. Okay. But 1/3 of Americans only paying the minimum due on their credit card each month it's scary. It's appalling because that means that credit card balances are likely going to just continue growing. And as long as credit card balances continue to grow and people keep taking out credit cards, we are keeping this industry alive that is doing nothing but siphoning interest off of you and I. Okay, yes, if everybody paid their credit card off every single month, credit card companies would have no money to make. Okay, but the fact that people do rack up interest, they do maintain a balance month to month, that is what's keeping these credit card companies in business. They need you to not pay them off. They need you to pay that minimum payment, because as long as you do that and as long as you fall into that cycle, then they're going to be able to make money, but it's going to just continue to hold you back financially because it is going to be a strain on your cash flow, just like every other debt that you have. Then the last scary financial fact that I have for you guys is that almost half of student loan holders express concern about their ability to pay off their student loan debt. This is not surprising. It is scary, but it is not surprising. It's not surprising that so many people are crippled by their student loan debt. There's no surprise here that almost half of student loan holders express concern about their ability to pay off their debt, right? A lot of people are really, really worried about their ability to pay off their student loan debt. And this particular type of debt is very, very tricky because guess what? You cannot bankrupt it away. You cannot file bankruptcy and get rid of this particular type of debt. If you were to file bankruptcy with student loans outstanding, you would still have student loans outstanding. The only way to get out of student loan debt to date, right? There's only a couple ways. The first way is to have it forgiven by either a company that you work for or, federal student loan forgiveness, which we've talked about is not very valuable, doesn't work most of the time, right? That you can do it that way. You pay it off, right? Or you die. Those are the only ways that you can get out of your student loans. And so it's scary. It's a scary fact of life that student loans are hanging around people's neck. And I don't want you to have that issue. Again, we have to avoid student loans. We have to stay out of this particular issue. We have to stay away from borrowing money. We can't just go to borrowing money each time that we think we need something or that we think, oh, I need to go to this school or I need to go to school right now, right? Maybe you don't need to go to school right now. Maybe you're not in a position to do this, okay? If you can't afford it and you can't pay for it in cash or you can't get scholarships to go do it, then you should not be doing it. And I know this is what seems to be an extreme idea, but really my only idea here is don't go into debt. right? Don't take out student loans because the ROI on student loans is so low. Not only is the ROI low, you also have the fact that within 8 years of a first-time student starting university, only 60% of them graduate. So many people are leaving university with student loans and no degree, which is even scarier. Okay, so stay away from student loans. They're just not a good idea. And then I just decided here at the end to just add a little extra scary statistic just to top it off, to put a cherry on top. It's because I didn't talk about this throughout the course of today's episode, and I think it's a very important issue to just top things off, is that Americans are under saving for their retirement. 1 in 4 Americans have no retirement savings. And those who do aren't saving enough. Okay, this is scary. And why is this scary? Because we're going to have a lot of older people, a lot of people who are wanting to retire, going to want to retire, and they don't have pensions because pensions have died or are still dying or whatever, right? A bunch of people don't have pensions. Social Security is more in question than it ever has been, and it's not enough to live on comfortably, right? And people are getting older. Boomers are getting older. Boomers are, a lot of them are in retirement right now, and they are retiring. Then you have the Gen Xers coming up behind them, and the Gen Xers are coming up fast, and they aren't saving enough. 1 in 4 Americans have no retirement savings. Listen, guys, it does not take a ton to get the ball rolling on your retirement. Okay, I'm not saying you can get to $1 million by the time you're 60 or 65. If you're 50 and you have no retirement savings, I'm not saying that you specifically can get there. I'm just saying that based on a certain time horizon and based on your willingness to sacrifice and to follow a financial plan to a T, something like the financial action plan, right? Which does absolutely work. It's what I do every single day. It does work. Okay, if you're willing to do something like that, then you can build up substantial assets for yourself without having to do way too much in the way of, investing prowess and having to pick the right stocks and the right. That's not the biggest part. The biggest part is put money away. We have to be saving for retirement. We have to be saving for tomorrow. We have to get out of this. Well, something that this whole thing tells us, this whole episode on scary financial statistics, what it tells us is that we are afraid to miss out on things today. We have fear of missing out. Okay. We want to keep up with the Joneses today. We have a short-term mindset, and we don't want to look out into the future. We don't want to defer any of our enjoyment. We want to enjoy everything just now. And we have to defer some enjoyment. We have to sacrifice something today. And I promise you, look, I do this. I sacrifice myself. Me and my wife, we could be living in a nicer place. We could be, spending more money eating out. We could be, wearing nicer clothes. We could be driving nicer cars. We could be doing all of these things with the money that we make. But what do we know? We know that if we do not sacrifice today, then tomorrow is going to be a very, very difficult situation. It's going to hurt tomorrow. Okay. And when I say tomorrow, I mean 20, 30, 40, 50 years from now. We want to be living the high life later on, and the only way that we do that is if we sacrifice today. So we have to save for retirement. We can't be in this place where 1 in 4 have no retirement savings, and those who are saving are not saving enough. This is very, very scary and very, very problematic, and I just think this is something that you need to be aware of, and you need to act. You need to act on all of these things, especially if they apply directly to you. If you have student loans, you need to act. If you don't have an emergency fund, you need to act. If you don't have any retirement savings, you need to act, right? You need to act. You need to make sure that the things I'm telling you today, you're not just using them and saying, oh man, that's crazy, that's wild. No, say that, but then go, oh, well, maybe I need to do something about my own financial life. That's what I want to leave you with today. I want to motivate you. Get your financial life back on track. Do the things that you need to do to get your financial life in the right place. And I help you to do that. I can help you do that via financial coaching, but I can specifically help you to do that if you just follow my financial action plan. It will work for you. Just do it step by step, part by part. Do it in order. Do it the way that I tell you to do it, and you will be perfectly fine. You can check out those episodes. Those are from a while back, but I talk about my financial action plan all the time because it works, because it will help you get your financial life back in order. So don't let me just fearmonger you all day. I want you to know that you can do something about all the things that are very scary, and you can help turn around all of these statistics and not become one yourself. So thanks for watching this episode. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards financial goals that you have for yourself, and then ultimately pushing you on towards long-term financial freedom. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.